There's a fair amount of bullish commentary that I want to lead our show off with today, not just from our very own Josh Brown yesterday on Halftime, who said this was one of the healthiest tapes that we've ever had. Wolf Research today. Is the next stop 8,000? Ed Yardeni yesterday on Closing Bell with me, 8,250. He said that might look too conservative, thanks to strong earnings. And here's Goldman's president, John Waldron, with Andrew Ross Sorkin today in Aspen. Pretty positive as well.
I would say the most important factor right now is earnings growth. Earnings growth continues to be really strong. We're going to have the second quarter was the 7th consecutive quarter in the S&P of double-digit earnings growth. So we've had very consistent and significant earnings growth, which is propelling markets. That's ultimately the most important fundamental driver. And I would say recently it's broadening.
Okay. So it's strong, it's broadening, and until that changes, you want to get negative?
No, I don't think you want to get negative at all. I think you want to understand where capital is flowing to and then understand what the potential risk is accordingly. We've seen in the last several days a return of the momentum factor in particular, isolating memory, semiconductor, and even the Mag 7 itself. A really strong day today from NVIDIA kind of coming out of nowhere. So where is the risk in all of that? Over the last several days, you are seeing the S&P market cap weighted outperform the S&P equal weight by 4%. So I would believe the risk as you move through the entirety of the summer is you lose the broadening narrative if the market, Scott, gets concentrated again. You do not want a concentrated market. That's a marketplace where portfolio managers like myself will underperform. It's a very challenging marketplace, and it pushes all the chips in a very isolated direction. That's the risk in the market.
Yeah, but what's the realistic risk? Because if you listen to Waldron and others, if the earnings story itself is broadening, and it's strong outside of tech, there's not an indication that your biggest risk is going to happen.
So no. So you're always sitting there saying to yourself, what can go wrong?
I hear you.
So I'm sitting here today, my strategy, Joe T ETF, all-time high. I'm sitting here saying to myself, okay, what can possibly go wrong? Where does that begin to reverse itself?
What if we're though entering a market where you need to start thinking about what else can go right? In terms of if you're getting broadening earnings, Jimmy's shaking his head, he's smiling. If you're getting broadening earnings growth like Waldron's talking about, and others are obviously focused on to why stocks can continue to go up from here, maybe that's the more apropos question today.
Well, and I feel like you and I had this conversation maybe 2 weeks ago. Remember the other 493 versus Mag 7s on earnings growth? And as we look in the second half, we're going to see that other 493 companies, their earnings growth probably surpass that of the Mag 7. But you're seeing it in the stock price reaction. I mean, let's consider things like Delta Airlines or the airlines in general. I'm just kind of pulling that out of thin air. But when you have a good economy, when you have broadening profit growth, a company like Delta is going to be approaching new highs as it is right now, and not just new highs, but a re-rating of the multiple. Or, Joe, as you and I spoke about yesterday, financials. If we weren't having this tear the cover off the ball rally in semis, we'd be talking about the rally in financials.
Well, we're going to be talking about that because they have made a nice move, and there's some kind of stealthy moves that have happened within the private equity prism. I'll get to all that in a minute. I do have some news that I do want to get to. Mackenzie Sagalis, it's regarding Alphabet. What is that?
So, Scott, we're seeing Google shares down around 3.5% now. The company reshuffling the leadership of DeepMind as Demis Hassabis moves into a new chairman role that's going to be focused on frontier research and then the broader implications of AGI. Hassabis will remain active, but with more time now devoted to AI safety and policies, scientific research, and medicine, including a bigger role at Isomorphic Labs. That's the drug discovery side of the company that he launched after DeepMind's AlphaFold breakthrough. Now, also as part of this reorg, you have Koray Kavukoglu, who will take over day-to-day leadership as the new head of Google DeepMind. Now, he has already been running much of the lab's model research since becoming Google's chief AI architect last year. So the company is framing this as a natural transition after getting Gemini back on track. And then separately, we're also seeing some departures. Longtime Google chief scientist Jeff Dean is leaving after nearly 3 decades to start a new company with several other employees. Google plans to invest in that startup, which will also partner with Google Cloud. So this departure is said to be amicable, and Google doesn't plan to replace Dean as chief scientist. That position was really created for him specifically to report into Sundar Pichai. What I will say, though, Scott, and perhaps why we're seeing shares move lower, is that this comes after a series of departures from Google DeepMind, including John Jumper to Anthropic, Noam Shazir to OpenAI. Before he left, Shazir was working on Gemini. So that's how investors are digesting. Yeah,
appreciate that. Mac, thank you. Okay, that's Mackenzie Segal. So we'll watch that, obviously, with shares down a little more than 3%. I want to get back to our conversation, though, on where this market, Liz, is going to go. 82.50 conservative, potentially, according to Yardeni, because of the earnings story. It's no longer FOMO, it's FEMO. It's the earnings momentum that this market has, and that's what he has been hanging his hat on. And as you heard John Waldron suggest, too, we're in a broadening earnings story. Don't just tell me about what tech is doing. I get that the numbers are enormous in terms of the earnings growth, but if you're talking about 12% for other areas of the market, that's pretty darn good, too.
I think it's very difficult to get pessimistic about this market. You've got internal strength, so 73% of the S&P above its 200-day moving average. We've had this huge rebound after a momentum washout, momentum that Joe is the expert in here. But I think the risk on this momentum rebound is that it is just that, a really swift rebound, and you could see it come back off of this strong momentum right now.
There's plenty of talk about that today, too, by the way.
And that usually happens, right? Semis went down almost 30% in that washout. So momentum died for a while, and I'm sure was very frustrating for Joe in some of that. But you usually do get a swift bounce. This is actually one of the swiftest bounces we've ever seen. So
yeah, right. You had one of the fastest declines, and then one of the fastest bounce backs that we've ever seen. Also,
so the risk is that it cools off, right? That it came back a little bit too strong. But there are a lot of other things to be positive about. Financials are still strong. I always look at financials as confirmation of a rally and confirmation of cyclicality. We've got almost 90% of financials above their 200-day moving average. That's huge. So I do think that for the rest of the year, we see a return to large caps. I don't see small caps outperforming large caps for the rest of the year.
Small caps, speaking of, the Russell's up 22% year to date.
Right, and that's a good performance year to date. I think that in the second half of the year, we see a return to large caps because I do expect volatility, but I also do expect this market to continue moving higher. 8,000 is only 3.5%.
Yeah, I know.
Here.
It's funny asking, is 8,000 the next stop? It's like now, okay, it's literally around the corner. It looks like it's almost dare you say, a formality at this point, but if the earnings continue to live up to the hype, why wouldn't you get there? Then you have to start asking the Yardeni question, 82.50, whether Jason Snipe, that's a little too conservative, and maybe part of that hinges on where the momentum trade does go from here. I think Liz made some really great points that are being talked about elsewhere on the street today. Jonathan Krinsky says the reflex continues, but shades of 2,000 continue to pop up. How quickly things change, he says. A week ago, semis were in a 30%, around 30% drawdown. We called time on the momentum unwind. Fast forward to today, we've seen the largest 4-day rally for the SOX since COVID. Yeah. The S&P has surged 5% over the last 4 trading days into a 52-week high in the last 30 years. That's only happened 3 other times, including March 21st of 2000, which was dead highs of the dot-com bubble. Jeff DeGraff of Renaissance Macro, he's going to be on Closing Bell with me today, says time and drift are typically momentum's enemy from here. What do you think?
Yeah, no, it's been a very interesting last few days, and I think the setup has been interesting to me in the sense that July was a down month. There was a lot of churn, violent churn, right? You talk about the drawdown in semis, and when we look at the math, obviously the impact on the market from that perspective. But when I think about what earnings growth is, and I know this has been the theme, this is what we've been talking about all week, 29% earnings growth, 65% rate have reported so far, an 85% beat rate. These are very significant numbers. And to Liz's point, there are other sectors participating. Financials, healthcare took a little bit of a step back in these last few days, but they have been participating.
Can you get to 82.50? Sorry to interrupt you. Can you get to the Yardeni number if momentum does sort of roll over again? Because then it's a heavier lift. Even if you get some of the bigger financial names to participate more, it's going to be much harder, isn't it?
There's no doubt. And I think because of the math, I think momentum has to play a significant factor in us getting to 82.50. And I think that story continues because of the earnings growth that we've seen thus far and the guidance, right? It's not like the spending is slowing down. The spending is only increasing. We're seeing profitability in the cloud numbers, from the hyperscalers and the downstream effects into other sectors. So I'm very interested to see how this continues to play out, but I'm excited about what I've seen thus far.